What's going on, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, our core list of companies here, and the Discord members did vote on a new set of quickfire round tickers. If you want to join the Discord, it's completely free and linked down below in the description, along with our free swing trade newsletter as well. So check all that good stuff out. We have a lot to talk about. The market was on a tear this week, and it left some poor structure below us. So is now the time to chase the long? Should we hold off? Let's cover all of that and more. But before we do so, I want this video to get over 200 thumbs up. We've done it like once in the past. Let's see if we can do it again and get over that threshold. I think we're hanging out somewhere around 170, 180, 190. Let's try to get up and over 200, the round number. So jumping right into our SPY weekly chart, talking about candle structure and location as always. For structure, really simple this week, right? All I have to do is draw a rectangle. We have a full-bodied green candle right into all-time highs. In terms of structure and location, obviously it's happening on a gap up that happened over the weekend. And if we just scroll and look at the weekly chart here, it's very rare that you see a gap hold on the weekly time frame. So I'm not a believer that, the market has to fill all gaps. However, the way we think about them, right, is if we're to revisit this area, there's essentially no liquidity in there. No one has a position in there. So the gap should fill fairly quickly if we trade back down to it. We're not, trading puts right out of the gates because the gap has to fill. It's just an area of interest if, again, we trade back down through it. Now, in the intro, I asked the question, is now the time to pile into new longs? Are we breaking out of this, triangle here? Are we going much higher? I don't really think now is the time to pile into new longs, right? The risk of buying the marketplace at these levels just far outweighs the potential reward. Now, could it, in theory, do the sort of low volume grind higher here into, blue sky territories and continue higher? It most certainly could, but more likely, I think we see sideways consolidation or even a slight pullback. So I would say that's the more risk-friendly entry from a longer-term perspective. Let's head back down to the daily time frame here, pop our levels back on, and talk about what could be in play. Obviously, to the upside, over the all-time high, you're just looking at blue sky levels, $0.5 intraday levels that do form. We're not even going to try to forecast a price point at this time. I mean, if you put a gun to my head, I hate saying that, but if you did, I'd have to put it at about 415, a nice round number, just based on, the distance that we've traveled so far. It would seem to make sense. We might go to that figure and then see some pullback, or we see the pullback and sideways consolidation right out of the gates. But either way, $0.5 until we actually get to, a figure like that. To the downside, this is where we can actually start to look into the market structure a little bit more and determine what levels we want to see hold. Obviously, this yellow is the gap, right? So anything under the 403.38 fills down to about $400.67. But before we get there, notice this area of the chart. So Monday, we had the gap and go, essentially went higher all day. And then we saw 2 days of consolidation that really respected this high in here. It formed a poor high. We talked about this in the midweek market update there. So on any pullbacks, if we go to that level, that's what you want to see hold, because anything underneath that, this level here is definitely going to flush. And again, we talked about this in the midweek market update. Not only are those poor lows intraday on the market profile, but underneath that is all single prints in the profile. So underneath the 405.38 area, and pretty much there's clear room to fall essentially all the way to fill the gap. So the area I really want you to place a lot of focus on this week is going to be that 405.38. All right, anything underneath that, very poor structure all the way down through the gap here. If we go lower, of course, it's just this prior set of highs that we want to see hold around 398. And let's just put the Fibonacci's on there to see where that brings us in terms of a pullback from this most recent leg up. So from low to high, a filling of the gap, actually, oops, it looks like I got an extra one there, would be ideal for the 38.2 pullback. So, again, the risk of it pulling back, in my estimation, is greater than it just continuing to float higher. Just buying up here is not, in my opinion, the most risk-friendly thing. But on the flip side of that coin, remember, it also doesn't mean that we're just blindly shorting the all-time high. I want to make that abundantly clear here. Although it's not a great entry, it's not also a great entry to try to time a market top. I'd rather see some consolidation, a clean intraday setup form, and then maybe take a day trade lower into some of these levels. So that's how I'm thinking about SPY as we head into the upcoming week. Again, 38.2 is perfectly aligning with the gap fill there. And remember, all eyes on 405.38. So moving over to our cues now, it's a little bit zoomed out just so you can see where we are in relationship to the all-time high. And just also note on this chart how many more sections of yellow lines there are indicating that we have gaps and poor structure below us as opposed to SPY. So a lot more poor structure here in the cues. Again, do gaps have to fill? They don't have to fill. However, if we get to them, again, expect a clean and easy movement through those areas, and they're just areas of interest to essentially trade around. We poked right up through this area, and to me it makes sense that we would probably go to the all-time high at this point. But again, the risk, so say you buy it out of the gates on Monday, right? Your reward is potentially something like this, okay? So we'll call that 1R to the upside, but your risk is essentially pulling back to Friday's low. So your risk is here. And again, it just doesn't make sense to be a buyer after we've already traveled so far. We either want to see that sideways consolidation or a potential pullback again here in the cues. Some levels that you want to pay attention to on the pullbacks, of course, these 3 days of highs are going to be important at 332.63. This is the equivalent here to the very all eyes on SPY level, that 405-ish 40 area that we talked about. This is the same equivalent here in the cues. That's about at the 329.50 mark. Anything underneath, just pick off all of these gaps if we continue lower. We'll do the same thing with the Fibonacci's here, going from the low of the most recent leg up to the high just to see if we have any sort of confluence. So nothing really stands out to me, right? The 38.2 is actually in the middle of the gap this time. I wouldn't place too much import into that. I would rather see the gap fill than it actually hold the 38.2 if we were to trade back down into that area. 50 SMA on this one is actually close to the 50% retracement. I would be looking for a significant amount of support there, especially because now that we've broken out of this chop fest range, I really would like to see prices, do something like this and go higher as opposed to actually trade back down into the range. If they were to trade back down into the range, and again, these are some longer term thoughts on the broad market just because of where we're positioned, but if we do trade back down, we always know that the bottom end of the range is essentially the target. So I'm not saying that the Qs pull all the way back down to 311, but from a longer term perspective, we don't want to see it revisit this box of price action, right? If we're seeing progress, forward progress being made in the upward direction in the Qs and tech, we go higher and we, essentially revisit this as support and then, go higher from there. So those are the thoughts. Obviously, blue sky levels above if we can take out that all-time high, but looking for sideways consolidation or a potential pullback at this point in time, given how far we've traveled. And then last but not least, we have IWM Russell 2000 and our small caps. And this one has been sort of the wild card, if you will, for quite some time. It was trending, much, much higher far before, SPY and the Qs were. And then, as SPY and the Qs have started to break out in the last week or so of trade, IWM, on the other hand, is just stuck, consolidating, right? So this is one, again, that, and I think I spoke to this prior, it's more of just a benchmark to see what the market's doing. It's not something that I would particularly go out of my way to actually trade unless there's a perfect setup. And at this point in time, again, it's just not there. We always talk about the fact that if you're in the middle of a range, and again, in the middle, meaning somewhere in here, it's essentially a 50-50 shot. Do you revisit the top? Do you revisit the bottom? And at this point in time, with the rest of the market trending higher, I would be slightly biased to the upside, but I wouldn't be surprised that, if SPY and the Qs see sideways consolidation or even a pullback, that IWM could, again, go 50% higher or 50% lower, and that's in terms of odds, not actually percentage movement. One thing I am seeing here, of course, is the double hammers that have formed at the 50 SMA at a prior area of support, so that, again, would lead me to believe that the move here could be actually higher in IWM to about the top of the range. You have some levels mapped out. Those are some general thoughts on what would happen in IWM. Obviously, again, gap to fill here, not as poor of structure as we've seen in SPY and the Qs, but there is still that small gap below us from 219 down to about 218.70. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out, and don't forget to hit the thumbs up button as well. Jumping right into our Apple chart, obviously a very impressive candle there on Friday on some decent volume as well. So was it Friday's options expiration that, caused this? I don't really like to read too much into that and just play the structure as it lies. Obviously, we've filled this gap here, and if we were to go higher, there's some room to run essentially in Apple all the way up to about the 138 mark. You can see it was prior all-time high from in here, acted as resistance on a head and shoulders in this area of the chart, so that's why we're looking at 138. Anything above, true all-time high is up there closer to 145. Again, does it get there this week? Does Apple do something like this? Probably not. The odds do not favor it, but it always could, right? So the more ideal scenario in my estimation is, again, you don't want to just be a blind buyer up here. I think the risk of pullback or just getting caught in sideways consolidation is probably too high. So what I would like to see on Apple, of course, would be a daily bull flag, something like this to form. It pulls back, consolidates sideways through time, gives us a clean upside breakout point, and then boom, we get a play that looks something like this. To the downside, if that pullback does develop, the areas of interest on this particular chart are the gap from Wednesday into Thursday. Anything under 128.50 fills to about 128 the whole dollar, 127.90 give or take. And then under that, we really want to see the 50 SMA hold as well as this 126.64, because just like the Qs, this was sort of the breakout area that we're moving out of, this range of consolidation. To make forward progress, you don't want to revisit past places of congestion, right? You would want to use the top of this as support and then go from there. So keep in mind, earnings are coming up on many of these, tech companies in the coming weeks towards the end of the month. If you're a swing trader, something to keep in the back of your mind. So Netflix, in my opinion, actually looks better than Apple in terms of remaining bullish on it into the beginning of the week. And the reason for that, obviously, is because if we look at this range or 4 days of trading, essentially, it really didn't do much, right? We've consolidated for 4 days essentially back and forth in this box, and it's not like we made a run straight, something like this the entire week. Day after day after day, we were gapping up. There's no poor structure below us. So Netflix actually looks good if it can take out this 556.80 mark, in which case we're looking at this small pressure cooker top at 566, we'll call it the whole dollar, all-time high after that. Again, does Netflix go there in the coming week and make a chart that looks something like this? Odds don't favor it, but it is the upside target. You can see there's very little structure up here above that target that we've talked about so far. On any pullbacks, I would be paying attention to essentially this. If we grab the right drawing tool here, the 2-day low from Thursday and Friday, essentially, it's almost the same value at 547.50. So if we flush that, then look for underneath to the top of the range. Again, just like everything else we've talked about so far, it would be most bullish if we held on to the 537.82 mark here in Netflix, did something like this, and then moved higher. Again, if you move back into this range of consolidation, you probably go lower ultimately over the course of time to the bottom end of the range at 493.85. But, in the upcoming week, maybe you're looking at the 50 SMA or potentially this 518.50 mark. As noted, we've talked about this in the past, very, very heavily congested area on the chart that could act as a magnet if we fail into the range. But as the chart lays, again, sort of favoring the bulls here, 4 days of consolidation, the markets overall have been moving higher. If we can take out that top, it looks good for upside. So Tesla, on the other hand, looks, not very interesting as it currently lies. We've talked about this in the past couple of videos now, that this inverted head and shoulders had the chance to play out a few different times. Could have went there, could have went here, and so far it's just shown no evidence of wanting to break up and out of this neckline. So as of right now, there's a few ways we can look at it. You can look at it like this, daily bull flag, in which case if we take out the high, I'd just call it 700, the psychological number at this point, you now have the 50 SMA as a target, right? And that's directly overhead. So not a lot of meat on the bone for that particular trade. If we can move higher than that, we have to take out 740, and then there's some room to run up to about 780 on Tesla. But ideally, this would have happened in the past, right? We would have broken this neckline here, done something like this, and then gone higher. 50 SMA wouldn't have been as much of an obstruction, but that's, hindsight. And that's neither here nor there. But for now, the other opportunity and way you could look at this is like this, right? Equal to lower highs, definitely a lower high here. Do we revisit and potentially try to set a new low in Tesla? So these are all things that you have to keep on, on your radar, right? This one doesn't look as good as the rest of tech, like Apple and Netflix, as we've seen so far. So Tesla, although it's a great trader, it does mostly have momentum on most days. This past week, really nothing to show for. So maybe it's time for Tesla to sort of catch up to the rest of tech and we see an upside swing. But until we sort of clear 700, I would be skeptical. So Alibaba, as we know, an absolute train wreck of a chart. We always talk about this. However, there can be some decent intraday opportunity here. There's a small gap above us. That's, again, if we traded back into this range being noted by this box right here. So from about 225 fills up to about 226.61. But as the chart lies, it's so choppy. It's so incredibly difficult to read, right? We have a number of instances in the past. We had this range here. Looked like we were going to fail. Nope, back into the range. Okay, target the top side. No, fail right back down. So incredibly hard to swing trade. Again, intraday opportunities only here. I'd really be focusing on what happens around the gap early on in the week. If we trade away from it, again, probably looking closer to that 212.07 for the chop fest to sort of, grind us down lower. If we go higher, 231.56 could potentially be a breakout, but I wouldn't really bank on Alibaba moving cleanly all the way up to the next target at 241.10. So Facebook is one that's actually moving quite nicely, right? It hasn't left a whole lot of poor structure below us. It has a nice day of, rally, pulls back a bit, nice day of rally, pulls back, so on and so forth. But at this point in time, I do feel like it could use a little bit more sideways consolidation. We've essentially doubled our bull flag. So this breakout here has essentially fulfilled its target, right? Coming up and doubling the length of the flagpole there. And right now, it would be great to see some more sideways consolidation and acceptance at these highs instead of just continuing forward. It would make getting an entry on Facebook much nicer. So obviously, the area of interest that you want to see hold first is the prior all-time high around 305. If we can hold that, again, looks good for another daily bull flag to form. You take out the high, there's your long trade to the upside. For that to happen, right, we need to break, again, that Thursday, Friday low. And just to put a value to it, it's at about 310.40. Anything underneath the 305, if it fails, the line in the sand for me in terms of remaining bullish on Facebook is holding this 297.41 as noted by the sort of high of the first leg up. And then you can see here, this inverted hammer, at least, it looked like we could have gone lower, but instead held it. Obviously, the market gapped up that day, and we never got a chance to revisit it. So if it were to be revisited, I really would want to see that hold as support on this chart for a bullish sentiment going forward. Another thing on Facebook to pay attention to, I'm coming in here after the fact, is this support trend line, right? We talked about some of those pullback areas. If this coincides for super support at any point in time, that again will give you a little bit of added confidence in making a buy on Facebook pullbacks. NVIDIA also has been on a tear, and again, is this the best place to buy it and chase the long? Probably not, in my estimation. I would say we can reconfigure some of these critical areas of support and resistance. Obviously, we had this one on the chart based on our three highs here, some congestion here, and it did hold up. But this level, rather, the one underneath it, closer to 544, I want you to make an adjustment and drag that up higher to actually represent support. If we just adjust this over to these 3 days of sort of lows, right? So I know it's not that far below us. It's a very nuanced level here on the chart, but right around 550 would be an area of interest, in my opinion, if NVIDIA were to pull back a little bit more. 50 SMA is slowly curling up. It may provide some super support around that area, so I would want to be aware of that. Anything underneath, and you're looking at resistance more like, support, more like here around 530. Let's actually put a value to it with a technical drawing here. I would call it somewhere in here. So 535 just about. That would be, again, if that breaks, super support breaks with the 50 SMA, that would be your next target. Again, do we want to head back down into this chop zone? No. Ideally, again, if there were any sort of deeper pullback, I'm not saying there has to be one, but again, if it looked like this, I would want to see that hold as support and not revisit this area of consolidation. That way we're truly showing signs that we are making forward progress to the upward direction. To the upside, we have some targets above. We're not quite at all-time highs. We have the 589 mark. Anything after that, all-time high resistance is up around 611. Microsoft, an absolute beauty of a trade. We've talked about this one for so long, the fact that it was holding this consolidation and it finally broke. It gave us what we were looking for to the upside, a perfect daily bull flag, right? Something like this breaks out, a small inside bar there towards the upper 50% of the range. Boom, after that we go higher. So just absolutely picture perfect plays here in Microsoft to the upside. But now, again, not the time to be chasing the long. The long was essentially this prior week. Going forward, we want to see this thing consolidate and cool off instead of just, continuing to leave poor structure below and making really emotional moves to the upside, right? We need to see some acceptance of these higher prices by buyers and sellers, essentially committing to two-sided trade, again, consolidation, and then you see the break higher. Technically, there is a gap to fill below us here. Anything under this 252 mark fills to the high of Wednesday at 250.95, call it 251 the whole dollar. Anything underneath, as talked about in SPY and the Qs, this 2-day low and then the emotional spike below us here is going to offer very little support. The saving grace is that we also have this prior area of highs in here, the all-time high in Microsoft, the prior all-time high that is, about, lower third, if you will, of that candle. So there could be some support should that 2-day low break there. Maybe you see support there, but ultimately, again, very little structure in that candle, and I would be watching for a move lower to about 240.18. But again, based on this chart and how it looks right now, do you think we're going to 240.18? I personally don't. I personally think we see some sideways consolidation, maybe a pullback to fill the gap. Maybe this week it looks something like this. I don't know, right? But at this point in time, not chasing longs and not really looking for shorts either. We want to see sideways acceptance in most of these stocks at these new all-time highs. And last but not least, the beast, the same thing with Amazon. We're not chasing a long up here. We're also not trying to time a pullback and short the top. So as it sits right now, very difficult to read. We're going to have to see what happens on Monday, early on in the week. Do we slowly drift higher? Okay, you're not, if you need to take a trade, right? We're in the business of making money here. Then yes, you trade it up towards that next level there, 34.30. But again, skeptical of longs, knowing that people have made their money, right, on this run, and there could be a sell at any point in time as people start to lock in profits. Now, of course, just like everything else we've talked about, the key level on Amazon that we don't want to see it revisit is, of course, this chunk of consolidation. So healthy pullbacks probably down here to about 32.50, and then a move higher after that, some daily bull flag to form. We have critical moving average support below us, right, 50 SMA, 200 SMA, both coinciding with this 31.82-ish area on the chart. Again, that's sort of the line in the sand here for Amazon. If we go back below it, eventually the target is the bottom end of the range. I'm not saying it gets there this week, even the next week after that, but something to keep in mind as an overall outlook. I'm sure you've noticed by now the theme is the same among many of these stocks. Amazon has some room to run. It's not quite at its all-time highs. Maybe one thing I would want you to pay attention to is this resistance trend line, something like this, which we're actually sitting at right now. So the odds of pullback here actually look pretty good, right? It may decide to pull back here. And again, that should be something you're prepared for. Kicking off the quickfire round with Riot. This is obviously going to move very closely to Bitcoin, so keep an eye on it if you decide to trade it. Obviously, symmetrical triangle forming in here. The way you trade this is basically patience until you break out over the top of the resistance trend line or underneath the support trend line. Obviously, favoring the bulls a little bit with the excitement and optimism in the crypto space. Targets above would be clearing, this is sort of super resistance as it sits right now, but depending on time of week, you could run into 56.35 as resistance. Really, after that, it's 66.25, and then the all-time high after that. To the downside, use this 50 SMA as a guide, right? If it remains above the 50, you're going to be bullish skewed. If it breaks down below it, you don't immediately take the short. Instead, what I want you to do is sort of be patient, exercise some patience here, and see what happens at the bottom support trend line. If it goes sideways and then breaks, instead of seeing a strong reaction from the buyers, then you're filling up the triangle to about the 34.12 support below. Next up, we have Mara, and this is, in my opinion, if you wanted to trade one of the miners, this would be one of the better Bitcoin or crypto miners that you should trade. The chart just looks much, much better. Instead of a symmetrical triangle, you have a clear uptrend. We took out the prior high on the most recent leg up, and now we're consolidating, pulling back, forming a daily bull flag, and using that structure as newfound support. So to me, this looks like a much more attractive chart if you wanted to trade something in the crypto space. If we take out the Thursday, Friday high at 52.13, trade up towards the all-time high, closer to 57.75, and then blue sky territories after that. Not really, again, looking for the short here in Mara until you can see there's not a whole lot of range and deltas to collect there. But if we were to revisit this 44.21 and then see a horrible day in Bitcoin or Ethereum or one of the coins, for example, then there's some meat on the bone to have a trade down to about the 50 SMA as it continues to upslope again under that 44.21, and that would even provide a decent pullback entry for a long-term swing if you want to be a trendline buyer. We have set a new high here. It looks good in terms of trend continuation from that perspective. Chewy, on the other hand, is completely boring, right? This one has been stuck range within a range. So a little bit of a teaching moment, right? We have a range, and then inside of that we have a range, and the way we trade ranges is on the break, you double the range. So in this example, we're starting to poke our head up above, so favoring the upside here. And I would say because the targets are so close, because it's a range in a range, look for more than just the double here, obviously going to the top of the overall range at 87.88. Anything above that, you're looking at this 50 SMA and prior high here. And as we know, as we just discussed, an overall double of this range if we were to break out of it. I know I'm saying range so many times, but this is how we think of balance areas, okay? I'll call it something different there. Ultimately, the target up above would be about 98.50 250 to the upside. Avoiding shorts on this one unless, maybe you take the break here to the bottom of the wider balance, but wouldn't really go much further than that, considering the 200 SMA is just below us there. So that's how I would look at that. DraftKings, this one, unlike Mara, actually is threatening to break the support trend line. And the way we know this, of course, is because we've defended it, right? Defend. Each time we set a new high. But on this case, we come down into it. This could potentially be a lower high. So some people like to call this an H pattern. Some people like to call it a bear flag, whatever you want to call it. Basically, we're not going to be chasing longs or looking at trendline support bounces here until we can take out 64 and prove that we could potentially set a new higher high instead of, keeping this as a LH lower high on this daily time frame. Now, if we can't take out 64.08 and the 50 SMA continues to act as resistance, then you're taking the break here to fill up the triangle to about 56.69, or just avoiding it short, right, and letting it shake out. That's always a possibility as well. Next up, we have Qualcomm. This one's back inside of the tech category, so do keep in mind earnings are sort of around the corner here. From the daily perspective, great break out of the range, just like many of our tech companies, and now forming a daily bull flag. If we can really resolve these highs here around 140.50, then there's some room to run to the bottom end of this prior consolidation at about 145. Anything after that, you're looking at about 150, the whole psychological number. And just to give you an idea, right, of where the breakout could be, it's a little bit of a stretch, honestly, in terms of doubling the range of the first break. But again, that could be an upside target somewhere in this general area of the chart on a true break of the daily bull flag. To the downside, really avoiding shorts until we flush below the flag lows, in which case your target isn't really, it's not the bottom end here to the yellow line 200 SMA. It's really only to here at about 135.50. Beyond Meat is up next, and this one, I don't really know what to make of this chart. Absolutely nasty downtrend after the gap up from, a number of months ago earlier on in the year, and basically just going sideways here. Nothing really too impressive happening. Maybe a flush point, or well, definitely a flush point has been, in place here at 129.75. If it breaks, trade it down towards the bottom end of this low here at 123.60 to the upside. Wouldn't really be favoring longs here, especially given the aggressive downtrend it's in. But if it does go to the upside over 135, look to about 142 and 200 SMA, 50 SMA coming crashing down on it from there. Fubo is up next. Haven't really touched this one. You guys know this isn't really my style, but could not ignore the absolutely massive volume spike there on Friday. But, although it had massive volume, still technically in a downtrend. Maybe it's breaking the resistance trend line through time if we do something like this. Nope, not really, right? So it's right at the resistance trend line, massive volume. Sure, a lot of people were transacting, but look at that upper wick, okay? So no love over that 23.75. If it does, and we can take out that high from Friday, then look to trade back up towards about 30. But as it sits right now, I would avoid it long until we get some clean acceptance out of this range, or take the short under 20.50 to go lower to the prior, sort of breakout point from in here, around $14, the round number. PLTR, again, you guys absolutely love this, has done absolutely nothing for, a number of weeks now. Can you day trade it? Sure. Is there anything to do here from a swing perspective? No, you're probably just losing theta and, getting not too happy with your position, right? If we break out over these highs, maybe it's been in consolidation long enough now for about 6 or 7 days that we see a break towards the upper end of this overall range that we've talked about, time and time again. Again, maybe you take that trade, but wouldn't really look for much more now that the 50 SMA is starting to come down lower. Would avoid the short also because, again, as you can see, not a whole lot of meat left on the bone. Under 23, you're only looking to about 21 as your next target underneath. Again, just something I would avoid overall, but that's if I had to trade it, what I would do on PLTR. SQ, absolutely fantastic run. This is actually a great one to trade. It's a real big intraday mover. So if we can sort of pull back here, consolidate at these highs, I'd want to see it hold this prior area. And you can tell on Friday, it's almost done that. So if we can consolidate, we're looking for it to hold about 252.20. In terms of the fibs, we're not going to break it out, but I would imagine it's well above the 38.2. 50 SMA is starting to curl up higher. Overall, if we just zoom out here, I want to give you a larger perspective. SQ has been consolidating, right, for a number of months, essentially. So if we get a larger move out of this range, I'm talking from, a long-term perspective, I could see SQ going much higher, right? But as it sits right now for trades into the upcoming week, again, would prefer to see some consolidation, daily bull flag, then a break here to go back towards those all-time highs. If we flush underneath this low, we're just looking at the 50 SMA as target below, right around 142, a whole dollar underneath us. And last but not least, we have Baidu. This one got, almost demolished, I would venture to say, right? We had a shoulder 1, head, shoulder 2, there's your neckline, boom, we went much lower. Defended the 200 SMA on the first touch, which is certainly important, but now it's just going sideways, trying to resolve this sort of dead cat bounce. Just like almost everything else we've looked at, we're going to have to expand this to sort of see the range, but overall, it's a day up, it's a day down, it's a day up, it's a day down. And getting caught in that with options and theta is not always ideal. So I would wait for a clean break above about our 228, the whole dollar, for longs to potentially come back up into some of this, poor structure above. There is some room to run, right? Based on, what we know about poor structure, this should offer very little resistance if we get the break here. So technically, it could go much higher to about 256.28, but until we see that strong confirmation out of this, day up, day down, day up, day down, then I just would kind of avoid it to the long side or any heavily biased trade, right? Not really looking for the short either until we take out this 217.39, in which case next up below is about 200 psychological. Midway of this wick, we have 185.50 coming from, if we just scrunch out a little bit, you can see prior shelf of support there, 200 SMA obviously after that. But as it sits right now, probably neutral until it takes out either the highs of this range or the lows. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section. I wish you all a green trading week, and I swear to let's get this video to 200 likes. I'll see you in the next one.